Ladies and gentlemen, welcome on into today's stream. We have an amazing look at this chart right here because no one expected what we're seeing right now. And we talked about this last week and even at the beginning of this week, and we asked the question, what if we get to the end of this week, the week that has so many negative catalysts lined up and it seems like the obvious short, right? What if we get to the end of this week and the S&P is sitting over 4,000? SPY is over 400. Not only are we over 4,000 on the S&P, and not only are we over 400 on SPY, we are sitting over 411 right now on SPY, the S&P 500 ETF. So here we are, and I think we have a lot to kind of cover, a lot of action. I got actually some stuff to do, so we're gonna do it all live here on the stream. So we'll talk about that, and of course, I'll update all positions, portfolios, and all. We'll see the P&Ls, everything in tomorrow's video, Saturday's video, like we always do. But we're looking at SPY, guys. I mean, if you ask me, we've seen this setup happen before. It's just trending. We're up about over almost 1.5% on the day. This has the setup, I think, and the look to probably squeeze into the close. I just think that a lot of people who were in shorts this week are going to cancel or cut them off and restart fresh next week. I think this is going to present an opportunity, though, because I think next week there's maybe a chance we can get a nice pullback, okay? So the idea here is that I'm going to be looking to hedge. I'm going to cut one of my small cap positions because I don't want to hold into August 1st. Essentially, their compliance deadline to regain minimum bid price over $1, which they have not done. So we're going to be cutting that guy off. We're going to look to hedge, and I'm probably going to go about a month out. But also, little XBI action. XBI is down 2.25 or a little, almost 2.5%, rejecting a view up here again. This is the biotech ETF. This is pretty weak today. So if we look at the trajectory here, it's setting up, building higher lows. It's still, like, generally speaking, a decent idea, which I did take XBI calls in the small account challenge today. And I bought them in a good spot. So, like, I'm kind of flat to slightly red, but, like, barely. So pretty much going to probably finish the day, like, plus or minus a few bucks, on that challenge. So it is what it is. So just start fresh next week. Got a lot of good data there. But my thought here is that I really want to buy the dip on XBI, but I want to buy that 50 SMA or potentially lower. I want to buy this thing down here. I think we can get that. And based on the relative weakness here that we're seeing today, maybe I'm wrong. Maybe we bounce and we hold this area again, and it's just the miraculous save, which we've been getting the past couple of weeks anyway, and it's fine. I have a position there on the biotech space, so I'm going to be covered. But I think the hedge I'm looking to go for is I think we'll do an SQQQ hedge to short the Nasdaq essentially, or QQQ, and I think we're going to do a LABD, which is the 3X bearish biotech ETF. So I think we'll do that. I'm thinking calls both ways, just not sure how liquid the options are going to be. So if they're not, the spreads are too big and there's not much volume, open interest is low, I'll just go with shares on each, maybe a little bit heavier. I think we can get SQQQ calls, no problem, or even just do SQQQ calls or QQQ puts. No problem. I'm just curious. I haven't checked out on LABD how that option chain is shaking out. I'm just curious. I think those are two great hedges. I think that they're worth letting expire worthless if wrong. So go out a month or so and let expire worthless if wrong. So put an amount in there on those types of hedges, which I'm going to do. I'm not recommending people do that, but I'm saying that's what I'm going to do. I'm going to go for putting an amount in there that I'm willing to just say, hey, if it's like, if it goes to zero and I'm wrong, I'm going to be covered on the longs anyway, which will outperform that, and I'm not going to, be mad, right? That's my plan. That's the thought process. Again, if you look at SPY's daily chart, here's the S&P. We are right up into this area that I said yesterday. In the past couple of days, we've extended extremely fast, past just 3 days alone. Okay, and we're coming up into this substantial zone. I think up to about 420. I'm going to give it up to about 420 or so is where I think SPY. I would give or take the next like $8 to $9. It's going to be kind of your spot to watch, but I think 417 specifically is going to be really the top of this zone, is going to be really strong. I really don't know if we're going. I don't know if we're going to blast right through. My guess is that we're going to come up here and we're going to probably come back down and maybe build a higher low if we're going to go higher. And then there's always the scenario of a bear market rally and we actually make a new low. So there's that. I wanted this spot right here last week We're not getting that, at least anytime soon, it seems like. Unless we get, this is a true bear market rally, we really do come down. But it doesn't look like we're going to get that. We're probably going to, if we pull back, chances are we probably pull back to 400 first spot and then down towards like 390. And then we'll see if we get below those levels. Those are the two pullback zones I want to see first. And then, obviously I would love this spot, but doesn't mean we're going to get it. So that's the spots I'm looking at on SPY. I think this is a really good spot for a hedge, though. I think it is. And I think it's a perfect setup, too, because you have, potentially even a squeeze out into the close. We might finish so freaking strong this week, even today. And I think that a lot of people are going to be caught off guard by that next week, because you might have a lot of people who are finally like, you know what, I might as well flip and go long. I was in puts. Now it's time to go calls again. Okay, market's going up. Here we go. And then they're going to be wrong next week in the short term. I think I'm not going to play it for next week expiration. I'll go out like a month or at least a few weeks, but that's the plan on any hedge idea. But yeah, Amazon holding up over 12%. Pretty solid day there. Not really too much variability there. A little bit at the open, then it kind of rebounded right back. ARK, with Roku taking a dump. ARK is essentially holding the 50 SMA, which is just chilling here. I sold some puts. Let me actually jump over to the Robinhood portfolio. So the money, everything is settled here. The Robinhood portfolio, we added, I think, 10 grand to it. I know 10 grand this week. And look at this. Look at all these options that are about to expire worthless. These are all options I sold. So we just sold some puts for ARK, never got filled. No big deal. I got paid $60 to do it. I'll take that. We bought some CCL and sold a covered call immediately on that. That's going to expire worthless. FSR, same deal, expiring worthless there. I sold an INTC put. We talked about Intel yesterday on the stream. I sold the INTC put for $34.50. If we jump back to the charts, I believe INTC came down early to like 35, and I sold it at some point this morning. It came down low of the morning, like pre-market was like 35.04 or 35.03, so whatever. Now it's at 36. So that, I got paid like $15 for selling a put today. It's lunch. Like literally, Like that's literally a lunch for today alone, in just one day on those puts. So it's kind of cool. And then I sold a snap covered call. All these are worth 1 cent, essentially worthless. They'll expire today. And then I'll just do it again next week on the stocks. I really don't have too much. If you look at the current positions, we're going to have a lot of cash. So CCL, FSR, Snap. What I'm going to probably be doing is I like Intel, I like ARK. Believe it or not, I like both of them right now. And I like ARK, especially after Roku got destroyed again. I kind of really like ARK here. Instead of playing an individual name in that space to kind of capitalize on what I think could be a much better next 6 to 12 months for growth names, go with the ARK ETF. Now that Roku, I didn't necessarily like Roku, but now that it's come down another 25% after this earnings, now it's like, okay, this is starting to get a little bit more reasonable for me, and I can get behind the heavier weight in Roku, given that it's now down a lot. So, looking at it with fresh eyes, obviously if you're in that thing from, whatever ARK was, months ago, it sucks, right? But with fresh eyes coming in now, it's not a bad opportunity, I think. While a lot of people are like trashing Kathy and everything, but I want the growth exposure with that ETF. I guess you could play other ways. You can go with, just buy some TQQQ. Yeah, whatever you want to do. But I like the ETF exposure there with a good amount of stuff. But I'm not going to be greedy there. I'm going to just be selling puts. So if I never get filled, I will just sell puts all the way up until ARK goes to whatever point that I no longer want to buy it at, right? And that's the plan. So ideally, I'm looking for pullbacks next week. And then on a red day, sell a put. If we get filled, we get filled. I'll be picking a price I want. Same thing with Intel. INTC, let's jump back to that chart. If we look at Intel's chart right now, obviously it's at 36. But if we broaden it out, big picture, Intel hit a new 52-week low here today. I think Intel, is going to be a solid play. Bigger picture, it's taken some big hits. And I think from what I saw from the earnings, also I like where it's at. It's at a nice volume node right here. Go back to 2016, 2017 timeframe for it to have this consolidation in the same price range we're at right now. I think this is, and this portfolio, by the way, too, is not a day trade or not a short-term swing. No, these are long-term type things. Hey, if these things bounce back, 25, 30, 40% because we were able to catch some bottoms, I'm taking the gains and moving on. It could go for much more. I don't really care. There'll be something else. There'll be another opportunity. That's the plan. But that's kind of the deal. I'll cover this again in tomorrow's video, but that's, kind of what's we got going on right there. And it seems like it's been a decent week. Let's take a look at it. Yeah, it's nothing crazy, just, $100 in the week. with the market dipping a little bit. And, a little bit, some of ARC was down. Well, not ARC was down. I think FSR, Snap, FSR, and CCL haven't really rebounded too much yet. And I don't think that they're going to right away, especially Snap with the earnings recently. Like, I'm not expecting much here, but with earnings in last week. But I maybe want to buy another 100 shares of each of these to kind of build those positions up a little bit more and sell 2 covered calls each week on them, and then still look to get into Intel and then potentially ARC, depending upon how much cash I have. And we'll see. That's the plan. So with that said, let's jump over here. We're watching, this is XBI. I'm just watching XBI, looking for, we'll see what happens in the close. I have one little position left, one more call on the 185 call for next week left. Essentially, it's going to be a flat trade on the small account challenge. It is what it is, but we'll let that one just do its thing until the close, essentially. I think we could still squeeze out on SPY, but XBI has been relatively weak, which is why I do like the LABD play, which is a 3x bearish ETF. Got to get rid of Grill, so let's do that right now. Hope everyone is doing good. NSPR dump today with higher volume. I have no idea. I'm not sure. I think that is potentially what's happening. I bought a little bit more to the point that I'm done buying. I'm going to just chill with what I have. But when I see volume like this on NSPR, and there's no reason, and I look around, there's no news, there's nothing new, someone knows something here, I'm guessing. So either someone dumped into, or ahead of earnings or whatever, or ahead of bad news coming, or someone just loaded the boat here and, we're about to have a rip at some point. So I don't know. We're going to, we'll see. I think the risk reward here is just tremendously better to the upside than the downside. But of course, anything could happen, bad news and penny stocks, it's the deal. So don't put more than, you're willing to, lose, I guess, obviously in that. But I like that. I'm going to get rid of this grill right now. I've been selling little by little today because, there's not much volume. So you can't just dump, 6,000 shares on the market, and then you're going to kind of, tank the stock. And someone kind of did actually here. We had, a 12,000 share order that just took this thing probably down like 5%. So you got to be kind of careful with some of these guys that are super low volume. But Grill, no need to hold this one. Hey, if they get some good news and hey, Grill comes back out, I'm officially all out of that. They get some good news next week or they get an extension from the NASDAQ, okay, great, I'll get back in. I think it's still got a good setup, so I'll go get back in, no big deal. This chart is just screaming buy to me. Like, this is a screaming explosion, penny stock type of chart to me, especially coming out of large cap earnings. I think it's a really good time. So we have now, let's check. We got about 4K cash. Let's start to establish those. Well, let's start looking at those LABD. I think we might get better prices though towards the end of the day here. I think we could squeeze out to the close. So maybe start looking at this stuff. But I think LABD calls. I think shares will do you just fine, much less risky. But I'm going to probably play the calls here just so I get a little more leverage in case we get a quick move, take the profits and move on. And what I would ideally do here is if LABD rips, right, and this gets a quick pop up into like the mid 30s again or low to mid 30s, take the profits on this. Take that money and then rebuy some of those Labu calls out for January is my plan. That's what I'm probably going to do if it happens, if we get that dip that I'm looking for on XBI. So I'm probably thinking, so what is today, the 29th? So we're about to go into August. I'm thinking I want to go out to at least August 26th, maybe more. August 19th you could do. It's the month. It's still 3 weeks out. Not a terrible idea. I'm kind of thinking maybe going out a little bit further just for some more insurance. Let's look at the 26 call options first. So this is LABD. It's the 3X Bear ETF for biotechs. Yeah, the spreads aren't too bad. There's not too much open interest. The spreads aren't terrible here, though. 28 calls are going to run you about $4 almost. Maybe the 25 calls, you can get one of those. Maybe one of the 25 calls. Not a bad idea. Not too much open interest, though. Let's check out September 2nd time frame. Still none. No open interest. September 16th. Let's check this. This is the monthly. Yeah, there's a little more action on these. Tighter, not really tighter spreads. A little more action on these guys. So this could be good. Let's see the August 19th. August 19th, still nothing crazy. You got to go kind of each whole number. But yeah, the spreads are kind of big on the 28s. I guess you can look at the 30s maybe. Yeah, you can look at the 30s and maybe get 2 of those, I'm thinking. Still not a great spread. This might be better for shares. I might just do shares on this now that I'm thinking about it into next week instead of the calls. I just like doing the calls just so I have more cash available in case I need it, but I don't know if I really care enough or really need to have more cash necessarily into next week. I'm probably going to be fine. So I'm thinking, let's see, let's go back to the 26. He's kind of had this 27 right here or the 28. The 28 seems like a decently tight spread. The only problem would be selling some of these guys. Obviously, if they, let's go look at the history of this chart for these contracts. I like to do that just to get a good feel for them. If I zoom into like the past for the hourly chart here, let's see if I go out and broaden this thing out to the daily chart. There's like no volume on these, so I don't know if I'm necessarily gonna touch that. Not really a fan. About the 27s. Let's see these guys. These have any more trading history? No, there's like no action on these. August 19th. Maybe we'd play the August 19th 28s. Let's look at the 28s here. A little bit, no, but still not really. No, I'm going to just go shares. LABD shares. That's it. Or you can go XBI puts. I guess we can go XBI puts. Let's look at XBI puts. Let's look at XBI puts instead of LABD. I would go LABD shares or XBI puts. XBI, I'm sure, probably has a decent open interest on some of these. The 26th of August. No, there's still nothing crazy here. 80 puts. I was looking at calls. Oh, yeah, well, those are the LABD. So you were supposed to look at calls, I guess, if you want downside. XBI puts. 80 puts. Yeah, these aren't that bad. Still nothing like, not that great in terms of the action on these guys. So I'm not sure I really necessarily love this either way. And I guess you got to go to the monthly expiration for some of these. So I guess if I go to the 19th, so 3 weeks out, and buy the 80 puts, let's see. They're going for like $3 on these guys. Yeah, there's a lot more open interest there. A lot more. 80 every $5 there's a lot more open interest on these guys. Okay, so this is what you want to look at. Tighter spreads. Okay, 80 puts for 3 weeks out. I do kind of like that, and I don't necessarily think this would be a terrible idea. So you kind of can see it's consolidating. I think this is not bad at $3. I would get two of these guys. I'm going to grab one right now, and then we'll see how we close up. Looking to get that at like $3. XBI put out 3 weeks. Just going out 3 weeks, and ideally looking for a pullback in the next like couple of days, next like 2 weeks realistically, and then take the profits from if we get a pullback on that, take those profits and then roll that into. I'm gonna grab one more right now, and roll those profits into what's it called, the long side of biotechs. That's the play. There's that. And then I also want to get an SQQQ hedge. I think I'll wait on that one. So we'll just chill for now, but I think I'll wait on the SQQ. The reason why I like XBI though, because I was watching it today and I just didn't like the strength. It's not showing much strength at all in this strong market. So I think that especially if we get a pullback on SPY next week, this is showing relative weakness right now. This could be one that pulls back. The only thing about this that I would say could be, the saving grace to hold this up is going to be the 10 years. Is the 10 years coming down, man, every day. Like the 10 years keeps coming down. So like those 2 puts there as a hedge, obviously $600 in there will be fine. Like if XBI rips next week or the next 2 weeks instead of goes down, I'll lose the $600. I'll maybe cut those off for some gain or for some value, maybe like salvage $100 out of that. Lose the $500 there, and then my current long position on biotechs will do great anyway, and I'll make up for it on that and more. So that's the idea behind it. That's really it. So that's the plan. And then I do want to get the SQQQs, a little SQQQ hedge. So we'll do that towards the end of the day. I'm thinking the last like 5-10 minutes of the close. Unless we get a really good rip. Let's see. Let's see where SPY's setting up. SPY looks like it wants to go for a new high today here, I think. I think it's at high today. Yeah, it's at literally hitting a high today right now. SPY. So there it is. Let's see. Down big on SIGA. That kind of pumped. Didn't that pump early in the week and then it dumped? Let's see. What did it do? Oh my goodness. What happened? There's got to be news. That's down 30% off of. There's got to be news. Jeez, that was up to 20-something bucks though yesterday. My gosh. That's killer. Averaging a bit on UVXY. I do like the UVXY calls here. I think it's a good idea as well. Chinese stocks getting absolutely annihilated today. I have not been focusing on them, to be honest, but China's just, I don't know necessarily what's going on in China, and I don't want to mess with that stuff right now, to be honest. Maybe this is the dip to buy, but Baba's not down towards lows yet, so they got earnings coming up. I would wait for those earnings on Baba. Really, I would be careful. Yeah, no, the thing about Grill, if Grill was, so what? You take the L on that, or, it's pretty much a break-even trade, minimal. On a swing, like a penny stock swing, plus or minus 5% to me is not a big deal, because we're looking for either, if you're right on a swing, your bottomed out play could pop 50% plus on a news spike, on potentially, a PR, whatever. Like, this thing could go crazy, or just a pump. It happens all the time. So that's the only thing. You can't get pissed. If we come back to it next week and there's some good news there, great. Maybe watch it runs on Monday. That'll be our look. But LABD calls super fun. Spreads wide. I don't mind. Yeah, if you don't mind the spread, that's fine. I think the XBI puts for me were probably the decent play. Yeah. Google calls. Let's see what Google's looking like. I would say, to be honest with you, I really don't like him here, especially Google coming up into. I like puts there, coming up into resistance. Think about this. Google has struggled up in this area the past couple of weeks, since like the end of May. Nothing against this long term, but in the short term, you have to think, now we have an extremely, overbought market, right? In the very short term. SPY could keep going, but it's just ripped straight up. We get a pullback to 400 on SPY, which would be super healthy, and then a bounce from there. Like, this pullback could be your better buy somewhere in here. Or even if it goes lower, that's what I'm thinking for a lot of these things. So just be careful. I think people are getting a little overexcited right now. Not that it will necessarily matter like long term, but in the short term, if you're trying to play anything option related or timing wise, I'd be careful. I would be a little bit careful. SWK by Stanley Black and Decker. Yeah, after the earnings, right? Jeez, that thing got hit pretty hard, down to under $100. Under $100, first time in how long is this now? This thing hasn't been under $100 since like pandemic time, essentially. Yeah, chart wise, it doesn't look too shabby. It looks like a really decent dip opportunity. Oh yeah, VIX. Look at the VIX. So UVXY, you can play that 3x, I guess, or more little leverage on the VIX. But look at the VIX. Look at the VIX. It's right into that spot. This is a technical, we got this. I drew the circle in like a week and a half ago, or maybe even longer than that, as like, if we came down to here, I like it. There it is. It never usually works out that nicely, but we'll see if this ends up breaking down and the market rips face, or we get a little relief bounce here on the VIX and then eventually a breakdown. I think we'll get the breakdown below this trend line at some point. I just don't know if it's going to happen right now. So let's see. SPY pushing, just looking strong as hell though. So let's look at the. I'm going to go back to Webull and start snagging myself some SQQQs. SQQQ call. I like the 40 strike. I really like the 40 strike on this, just as a good hedge. And I would say I'm going to go out. I would want to go out a month. There is seasonal weakness into September, so maybe the safer play is going out to like September 16th expiration date. I would say they're going to be more pricey, but could be a safer play. So the September 16th 40 calls on SQQQ are going for like 450. If I go to August 19th, what is the difference? They're way cheaper for August. So I think that I might play the Augusts on those. Let's see if about the 26th of August is still. The spreads are not terrible. There's not crazy open interest there, but the spreads aren't bad. Maybe I'll even do those. I'll go to August 26th. Let's do that. Let's double check this chart just to see how this has been trading. Yeah. So this option contract that I'm looking to buy, I'm going to buy one right now and then save one more to the close in case we get a further squeeze out. It's at 335 right now. Back on the 27th, which is 2 days ago, was trading up here at 850. So if we pulled back, on SPY, $10 next week, which is not even a big deal. You're going to get back up into the 5+ range. So you can almost double this contract if you get a $10 pullback on SPY. This is for QQQ. So obviously let's look at the QQQ chart first, just to make sure we get a better feel on that. We like to look at SPY, but let's just look at QQQ. They're kind of similar. They're going to be running the same kind of deal here. Up towards high of the day. I like a QQQ short versus 320 anyway. This is a spot that I already had charted out from weeks ago. It's a prior area of support back in here. Was the resistance right here. Also a higher volume node right here. I really like this as a good risk reward for a short. And so for a hedge play, let's grab that one right now. And then we'll look to grab one more of these into the close if it does keep squeezing out. But I'm going to go 335 right there on this guy. And let's see if it gets filled. Maybe it's not. Maybe we'll give it a second to get filled. I might have to adjust it up 5 cents. This is the 40 calls on SQQQ for August 26th. So going out about 4 weeks, just as a hedge, just to hedge yourself, and it would feel pretty good. Again, I have primarily longs anyway, so this is I think a good hedge to have on the back burner. Not so just not have to worry about it, And then essentially the idea that I'm looking for here is, you're trying to thread the needle a little bit because, you're trying to get cute potentially if it all works out this way. But, if we get a pullback next week, I don't know how far it's going to pull back. So I'm not going to hold these things very, very long. But if these puts or these, the hedges, they pop up and they go 50 to 100%, lock in the gains there, and that's it. And if we do go lower, guess what? I now have more cash that I can buy the dip with. That's how I look at it. So I don't care. That's the thought process. So let's see what we get on this guy, this SQQQ call out to 40. I like the 40 strike. We're essentially trading at $40 like right now on SQQQ. So I do kind of like it. I'm gonna have to adjust. Let me adjust this guy up like one more little 5 cent notch. See if we can get filled at 340. Okay, so we're filled there. Now I'll grab one more if I have to. Into the close if we do squeeze out into the close, which I think we very well can, but that's the plan. So XBI puts and SQQQ calls or the way I'm going to hedge it. But outside of that, though, we're just chilling. I mean, I really want to buy some Soxel 15 strikes again. The problem with Soxel, it's at like $20 now, so I'm not going to get the chance there. That position's pretty freaking nice. I got a lot of money in that, I guess, relative. And it really wasn't that much. I did take a beating because I started buying it a little bit early, but now it's come back. I think I recouped all the losses and some. I took in some profits on it, but I still think we have more. We can go much more. But essentially, I kind of got lucky, and I was buying it like right here, like heavy, pretty heavy. So now that the thing's up essentially 100% off the bottom, these contracts, the 15 strike contracts, look at this. I bought this. I have an average at 242. The thing is going for almost $8. That's insane. But this can go way more. And these are January, so I got still like 6 months roughly. A little bit less than 6 months, I guess. I don't know how many. It's end of July now, so end of January. This is January 20th expiration. So yeah, it's about 6 months. That's killer though. The Labu calls that I have, the $10 strikes. Look at these. They've kind of they hit 350 at the highs. I did sell some over 3. And I have an average at 145. We're down here. I mean, I think we'll get it under 2 next week if we do flush out. But that thing comes down towards the 150 area. That's a spot that I would look to be, buying more of those into next week or the week after that or whatever on whatever dip. I think that's personally the spot that I want. But I think this is a good time. It's going to be a good example. We'll see. Maybe we just rip face and we just keep going. But I think it's going to be a good lesson. Of patience because, while we do seem to be rallying, I think there will be one more little gut check here, potentially, at least in the short term, after just a euphoric week like this that blew out shorts left and right. I mean, you had a week where no one thought the market would go up. No one thought we'd be at 412 on, Friday afternoon. Guys, we were literally looking at SPY on the 22nd because we were talking about this last week on Friday. The 22nd, this is Friday afternoon, our stream last week, right? We were here, okay, on SPY. And we were at we closed at like 395, 394, right? We were like, there's no freaking chance SPY is going to finish next week over 400. And here we are at 412. That's nuts. And yeah, no, the grill could have been such a meme. I mean, if that thing actually went, geez, I'd be buying so many burgers and just hitting the pool and taking to the grill. But they'd pay for plenty of that. It would pay for many, 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 pounds of beef if you wanted it. Yeah, so we talked about Labu. Well, pretty much essentially XBI, LABD, all that stuff. HKD, what's up with this thing? Let's jump over to Webull again and just see how this top gainer's on the day. Jesus, oh my goodness. Yeah, so I think you want to talk about somebody igniting the fire. Small cap land. I'm telling you guys, I truly believe that as long as the market doesn't go make a new low, that this is about to be a really, really hot next couple of months for small caps. I think we're going to maybe not like right now, but I think that we're going to start picking up the coming months, and then into the seasonally, it's seasonally very, very hot into like December, January, February, March. Maybe that's the time frame that gets really hot again, but I think this is the time to start dialing it in, grabbing a couple names that you freaking like down here cheap as hell, and be patient. There's no need to chase, like chasing this crap. No, don't chase H. If you're a momentum trader and you've dialed yourself in and you know what you're doing, go ahead. But for most people, I would never recommend to chase this thing. No, please don't. There's 1,000 more small caps that are sitting down at bottoms that have, setups that could be, bigger than this. But this is a stock that went from 12 to 400. We're talking about a 4,000+% runner. 4,000+%. Like, let's understand this. Like, this could be what ignites the fire. Like, you need one of these. Blow out the shorts, like blow out, explosion, right? This is what kind of turns the algos back on. This is what gets people excited about press releases now. This is what gets people excited about IPOs. This is what's going to get the fire kind of going and get the flame, turn the flame back on in small cap land. And I'm telling you, like, this is what we want to see. So, you're never going to, it's very, very rare that you're going to be, all over it and you're going to be in the one that goes. But now from here, there's a million other ones that are just sitting back, super cheap, at support, quiet, tons of cash on hand, companies that have actually been potentially growing throughout this past 6 to 12 months where the stock's been falling. Those are the gold mines. Those are the ones you want to be in. So that's going to be my focus, outside of a couple swings and inside of large cap land, I guess. Any new position in terms of swing trades or bigger picture is going to be probably all small caps. That's where I'm looking. So biotechs, oh man, we got some good stuff. I'm telling you, it's going to be exciting. I think it should be a really nice period of time. Doesn't need to be as hot as it was back during the pandemic. Doesn't matter. Doesn't even need to be that hot. There'll be plenty of upside to take advantage of. So that's the look. I think this is how psychology kind of goes. I think you're gonna if maybe not next week so specifically, but maybe like the week after that, is probably gonna be a pretty decent time. I'm thinking for a pullback right after people got blown out. Usually you have the shorts get blown out, then you get the pullback, and that's a much cleaner short. So if you're shorting small caps, what a lot of small cap shorting, or traders who are short bias on small caps, they look for these momentum blowouts. Like they look for halt ups, they look for explosive moves that just squeeze the shorts right back out, that squeeze the stubborn shorts who are kind of like adding into the way up. They squeeze them out. Then there's a really clean backside trade. Now maybe it comes back down and holds a higher low and then goes even higher, sure, but there's usually a really nice chunk of change that can be made on the backside of that, and that's kind of the thought process. Jumping back from Webull back over to TradingView, it's kind of my thought process for the S&P. This is kind of what I'm thinking. I'm thinking maybe we get a little more to go, maybe up a little bit up here, maybe next week. Sure, it could go higher. It could be totally wrong, but I think you could get a quick backside trade, maybe back to 400, and then we'll see. Do we kind of build higher lows? Or do we go lower? What is the deal, right? Like either we're going to go like this, or you're going to maybe go lower. I don't know, but that's the thought process on SPY. So, we get that pullback. I think there'll be some decent dips to buy, or at least have your your cash ready. It's just really why, especially on the Robinhood portfolio, I was not sitting here trying to go slap these stocks and buy them, because I noticed even though this week was green, right, for the most part, or pretty much for everything except certain stocks that fell off. If it was red and all these negative catalysts had happened, then I would have gotten filled on my ARK put that I sold, which then I wouldn't great. Okay, I got the ARK, I got ARK at the price I wanted to buy it, but I'm not going to chase these things. There's no need. Especially, I think what's really cool to think about too, especially as I threw in some more money here, this portfolio, this week alone, just from selling puts, and selling covered calls, I think cash flowed probably close to $100 this week alone. So not saying that that's going to happen every single week, but if you were able to cash flow from selling options each week, and I could have sold some stuff closer to the money, I could have made a little bit more than I really did here. Like, that's pretty cool. $400 a month, $400 to $500 a month, from just selling options. Obviously it's a volatile time, so stuff's going to be, there's maybe higher premiums, but that's pretty cool to think about. And when you like take a step back and it just shows you 10x this portfolio, you get to 100K, like what do you, maybe you can cash flow that thing at, close to $1,000 in that week. That's freaking cool. Like, that starts to become substantial, money. That's not just like, oh, I'm cash flowing $5 here or there, sold a covered call for $5. Cool. Like, you see how fast it can kind of stack up to be much more meaningful. So that's what I like about that portfolio. And we're going to see how that plays out this year. I mean, again, if we do go crazy high on stuff, I'll try to be selling my covered calls on whatever I have, but I'm not going to chase this crap higher. ARK, I'll be selling puts to get filled. I'm not going to just buy 100 shares of ARK most likely. I'm going to be selling puts to get filled on ARK. And then same thing with INTC, I think is a little bit less risky. It's not as expensive too. It's a little bit less risky, I would say, maybe. It is an individual stocks, which takes on a little more risk, so maybe it isn't less risky. But I think after these earnings, I think it's a decent play. So maybe that one I'll grab if I can't get filled on a put that I sell. Maybe I'll grab 100 shares at some point there. So that's the plan. But that's so we got shaken out so far, or going on right now this week. Let's see what XBI can do here. It has been just stuffed under VWAP all day long. I have one last option position there on the small count that I'm just waiting to dump before the end of the day. If we get a big move up or down, or at least maybe a break of a VWAP or a flush back down towards 80, and then just cut it. Jeez, Tesla's nuts. 157% on a Tesla call. I think so. Let's just look at the chart. I mean, if you look at Tesla, it's going to be kind of the same thing, as what we just talked about for the most part across a lot of this stuff. Tesla's pushing $900. I mean, you're approaching the 200 SMA. You're going to hold over the weekend. You killed it. Could you squeeze out some more juice? Yep, you totally could, right? But I think a pullback on Tesla is much more, going to line up in your favor, risk reward wise. So that's what I would say. You're getting up into, I think this $900 area is going to be really crucial, where it's going to be, at least it's going to be a strong resistance. So just be careful. I would take the gains going into the weekend right now. I think what you're kind of seeing is just a squeeze out. Realistically, what I should have done today in the small account is I probably should have just bought SPY calls on a dip and said, yep, risk versus, low of the day on this dip right here would have been a much better trade than XBI. Buy SPY calls there and say, hey, I have the thesis for the squeeze out today. As long as we don't go below low of the day, I'm staying in. It could have gone out 2 weeks on the SPY calls for all I care. Wouldn't be as volatile. Just steady grinder all day long. I think, if we keep, look at this move. This has the look of I think, of this type of move into the close. More of a straight up spike, just squeeze out completely. That's what I'll add the last SQQQ call. And that's what I'll be doing. So that's the plan. Jeez. I think a lot of people were wrong. I mean, it's not like it just because maybe it sucks that you're like, oh man, it sucks, I'm hurting. But I think a lot of people were wrong. A lot of people. I can't tell you how many people were wrong. Then I see these guys, and nothing against these guys, like, because they not like knocking that they like, or maybe they are fake, but who knows? They post gains, and I guess I believe them on social media. Some of these people, especially on Twitter. These guys that never show their face, that you don't really know who they really are, and whatever. Okay, cool. You have no idea who their actual name and stuff. But when they post, like, because this one guy I've been watching has been just absolutely bearish all freaking week long. The guy makes a lot of money, does very well, I think, unless he's lying about his gains, which he could be, right? But he's been bearish all week long. He's been just openly saying this is going down. This is good news, right? Yeah, joking. This is BS, right? Whatever. And the guy's got like 50K followers. I'm like, dude, like, I know, like, you might think it's the same thing, logic, right? We all think that this is all bad news, but it's at the end of the day, the market's going higher. You can't deny that. And your followers are not day traders. That's the biggest problem, I think, when people with a following, especially a big following on social media, who are like traders. There's a big difference. I am telling you, there's a huge, especially in this environment, Difference between a swing trader and a day trader. Now, you might continue to say you're bearish, bearish, bearish. So what are your followers going to do by saying all these things? They're going to be the ones that are loading, SPY puts. They're loading QQQ, but they're loading UVXY calls with their entire portfolio, right? Obviously, you can't control what someone does, but there is somewhat of a responsibility, I think, in that case, where, because you can come into the market fresh every day, be bearish and short any pop, and there's always a pullback, right? There's always opportunity to make money on the downside if you time it correctly, right? You can do that all day, and you can make money even though you are bearish, even though the market went higher this week, because you're a day trader, you're in and out. But if your followers are not, they're all getting blasted and destroyed this week. So I think that's a big problem, especially on Twitter and, really even, I guess, YouTube too. I don't really know how many more like super active traders there really are on YouTube that like post like that. I think Twitter is more, because Twitter's like kind of real time, but it's bad. I've seen a lot of it, and I think a lot of people this past week got blown out. I mean, in CNBC too is a bad example, because CNBC all last week, the week before, they were like, oh man, this earnings season's gonna be so bad. Get ready. We're going lower. Here comes the next leg down. Like, that's what they were setting you up for. Whether they said that or not, that was what they were implying. All these guys coming on. And what happens? We go the opposite way. So, I mean, at least here, we're always going to look at both sides. We're always going to have a view of both sides. And, I think at least there's definitely value in making sure you're paying attention both ways, because you can get burned very, very fast if you have a little bit too, if you're not thinking clearly, or you're thinking narrow-minded, or you're kind of got tunnel vision on like, oh no, market's got to go down. This is bad news, right? Doesn't mean that we have to go down today. Could have been all discounted the past 6 months. And now here we go, which, believe it or not, right, that to some people sounds ridiculous, and I think it totally does, but maybe that's just what happens. I mean, I don't know. Maybe this setup is, this recession is scaring the Fed, and the Fed's going to pivot. Maybe that's what CNBC's been saying the past couple of days. Fed's going to pivot, and this recession is actually going to freak them out, and come September and the next couple of rate hikes, it's not going to be as bad. We'll see, and will that necessarily be a good thing? I don't know, but like for the market, big picture. But let's take a look at the current setup here on current probabilities for the next rate hike. So we're about 53 days or 54 days out from the next rate hike. So this next rate hike for September, right now, market's projecting a 75% chance of a 50 basis point hike. So that could be why the market's been liking things, because now only a 50 is coming maybe next hike time frame. Maybe we'll see how that ends up shaking out, but that looks like that's where the probability is at right now. Look at this though, by the way, too. Look at this. Here's the 10-year. It's bouncing up actually this afternoon a little bit, past like hour or two, but here's the chart for the 10-year. I mean, look at this. Like, we've been talking about this head and shoulders potential setup right now. Didn't really like a great right shoulder here, but this could, I guess, potentially do. I guess you could even look at this too. But this is breaking down. I mean, I think 10-year is coming to 2.55 and then down to 2.3. Those are the next spots for me to look at, which is why I have TLT. I have about TLT calls on this week. I started buying them. I got about 5, so like $1,000, which is like, what is that, like 5% of the portfolio, I guess. The Weeble portfolio is in this. TLT calls for October though. They're out pretty far. But yeah, look at this setup on TLT. I think TLT is just like priming. I gave it time, but I think we're priming for a breakout here. This is coming soon. Once we get that breakout, I'm selling into that push up. I don't really care if maybe TLT goes to freaking 135. I have no idea. I don't care. I'm selling into this breakout. Doesn't matter. That's it. That's all I'm looking for. So that's my plan that's October calls on those, but it's still a far way out. I would imagine the move happens in the next like month or two. 4,800 a year consistently. Yeah, by selling the covered calls. No, it's pretty freaking good. You know what I mean? Like, you do the math on that, right? Plus the potential, obviously the goal is to appreciate on the stocks, right? That you're buying. We'll see what you can do. It's cool. This is why I think that portfolio is an amazing portfolio for you to always have like a consistent stream of income coming into, because what the end goal realistically is, everyone always talks like, oh, come to the stock market to be, become financially free or passive income. The financial freedom aspect, obviously, like you can be active and you can trade for the first half hour or the first hour and make your money and move on, and then you kind of have your whole day, right? So I guess there's that. But the second aspect, it really, the thing that I think is more appealing is the beach type of trade. I think the beach type of trade is not someone who's dialing into SPY calls or puts like right now based off this quick like 5-minute chart. No, the beach trade is a guy who says, oh, market's down this week, I'm going to sell some puts. You know, if I get filled on these stocks I want to buy at these prices, great. I get paid to do it. If I don't get filled, that's free money for me. Like that's kind of, in my view, the beach trade, right? Where you're sitting back, it's chilling. You don't have to, it's not looking at like, oh, just dialed into this, you know, level 2 or the time in sales. Like, no, that's the beach trade. You're just chilling and doing your thing. So this is the portfolio that you realistically, you know, would want to be. I would think if you're more of an even being more of an active, I would say more of like an active investor, not even necessarily like a trader, because you can have, you know, a portfolio of just long-term stocks anyway and do the same thing as you build it up. But as just an active investor or trader, this is what could be what cash flows you as you build it up to a couple $100,000. You know, that's what you could potentially live off of, you know, going forward in the future. And I think that's where your freedom comes from. And I think that's, you know, you can look to do things like what we talk about, which is what we focus on here a lot, is like the short term. You can make money in the short term, but I think this money in the short term that you make here is what you need to feed into those other portfolios or other investments that are going to cash flow you each month to allow you the freedom, right? Realistically, if that's what you're looking for, you know. Whether this money gets filtered into, you know, a rental property or a vacation home or something that you can, you know, then put up on somewhere and rent out, right? You know, I don't know. I don't necessarily think this is the best time to do that because things are still pretty expensive. Selective markets, I think we could still see more backside in real estate. But also that's coming from someone who doesn't have much experience in real estate, so I have no idea. But I just look at some charts and look at the value and look at how much that has appreciated over time relative to a lot of other factors. And I just don't really think that I'd be interested. For me, it's like if I was ever going to do something like that, it would have to fall into my lap. Like if, let's just say, you know, next year or 2 years from now, we had the real estate market crashes down and I'm sitting on, you know, just all of a sudden I hit some massive short play or whatever. Let's say we had DRV, right? Or something like that. I had some like DRV, like a pretty big position in DRV, and this made a couple grand or made more than a couple grand, right? 10, 20, 30K, or who knows? And it's enough for a down payment on something that I, you know, maybe it falls in my lap. That's how I would do it, but I'm not really actively seeking any of that stuff as of now. But yeah, here's DRV. This is the 3X Bear ETF for real estate. I think DRV, there's a legitimate possibility this thing comes down sub 35. I think down here. If DRV gets down, and let's just say DRV this year makes a new low, I'm going to buy that. So let me just make some alerts right now, just so that I don't forget, because I feel like it could be very easy to forget if the market heats really, you know, gets hot again in terms of real estate. I'm going to put an alert here at 35, just so I'm, you know, paying attention to it. Every time value crossing, I'm going to go say, let's just go less than 35, and I'll come back to it and reassess. So 35 flats, and then I want to do another one here at the lows. Was $29.55 for the year, so I'm going to do another one at $30. Let's do $30 every time we are not crossing. I want to say alert me when it's below. That's, I think, the look. Yeah, I think that's what I want to do. Let's just say crossing. Let's do crossing. I'll just do crossing down on this one. Every time we cross below $30 on DRV. It's still, you know, a ways away, but those are the levels, 35 and then $30. We'll see how long it takes to get those spots. If the market rips face, you know, I mean, we could totally get there faster, you know, on this. And especially if bond yields come down, which they've been coming down, you know, this is going to be very helpful for the real estate market. So in the short term, it's good. Every market's different, though. It depends on where you are. I know it's funny. I mean, we have a place here. Check this out. I'm going to pull it up. I'm not sure if anyone really cares, but I'm going to pull it up really quick. I'm not sure if you guys are familiar with this, but this is a place that's just built up right near me in downtown Austin. Check this out. So I saw this and I was like, okay, like this is a brand new building. Like it's open for rental, or you can lease it soon. I think right now you can lease starting whenever. So I started looking at this and I'm like, okay, cool. I see a studio for going for 25 to 100 to 3K a month, a freaking 600, less than a 600 square foot studio. I'm like, get the F out of here with that BS. But this is the reality here, you know? And so it depends on where you are, but they're struggling, I think, in terms of to fill their place, because I think I just saw someone, they're doing like a 6-week free promo. Like when they start doing those promos, you know, they can't fill the units. But like, this is the reality. It depends on where you are, what markets you're in. But like, this is insane, I think, for what, you know, for what it is. It's like, geez, man, I know it's a new building, but like, oh my gosh. And that's in Austin, Texas. So look, there's XBI making a little pop. Let me get rid of my XBI. We're going to take I got to get rid of this. I have an XBI little call here from the small account. The small account took a decent slap yesterday. Pretty much played SPY and got screwed on a rip through VWAP. We just kind of exploded and broke out, and I had puts. Whatever, it is what it is. But yeah, it kind of sucks, but it is what it is. And we move on. This is a good week in my view for data. Very good week for data. I'm going to see if I can get a sell here at 50 cents on these calls. If I can sell it at 50, I'll take it off. I still got 30 minutes to go until I get out of that. But it's a good week for data, so I'm going to be going back. This is actually this week, and I'm going to do that. I'm going to go back through and essentially log everything in this past week. Wins, losses, you know, what was good, what was bad, what days were the best, you know, trade setups that were the best. And so next week, there should be a video coming very, very soon next week. I think probably Thursday. I'm planning to do, hopefully by Thursday, because we usually do streams on Monday, Wednesday, Friday. Essentially logging in and just seeing, okay, like how did the portfolio do? What was the best? What could we take away from it? Because the key about that is it's the beginning, the first, like, honestly, the first month. So we still got another like week or two for the first month on the small account challenge. I think really the biggest key takeaways are going to be like getting your data. So just trying a bunch of different trades that like you think are solid and that you think the risk reward is good. Get your data from that. And it's great to do on a paper trading or small account. Get your data from that and then dial in. So now if I know I am killing it on breakouts, okay, my XBI just sold. So now today's on the small account challenge, we pulled 664, so 4%. It's not bad. You did 4% a day. It's pretty freaking good. Whatever. But get that data, and now we can dial in to eliminate. Like it's simply. I'm a very numbers oriented guy. It's simply looking at the numbers and saying to myself, if I know I have a 30% success rate and I've lost X number of dollars the past month with this strategy, or on this day of the week, or at this time, or with this specific stock, I'm going to eliminate that from my list. It's not going to happen. And you cut the fat and then you narrow in on what works, right? That's how I see it. So that's the plan. That's what that video should be all about. So look at that little XBI. It took a while to friggin' finally go, but finally it did. I'm surprised. I was surprised by the weakness all day, and then strength into the close. I had calls. I had originally bought, what I did on this play was I essentially bought calls. I forget exactly where, but I think I bought calls somewhere in here. And then I sold one into VWAP. And then I only had one left, and it was kind of bleeding, but it wasn't really down much. It kind of was like down, and then it was back up. Then I bought one more down here, and I said, okay, if we flush through $80, a 5-minute close below 80, I'm out. Because this is a trade that was like big picture though. Like I liked this zone anyway, and $80 was kind of a line I already had drawn in. So I wanted to see 80 hold, 80 held. And then I bought one more there, sold that contract into VWAP, still had one more, and I finally got rid of the last one here on that push above. So realistically, could have done better if there wasn't as much time decay. These are next Fridays. There was a little bit of time decay, nothing crazy though. They are next Friday's contracts, but it worked out. It was a green trade, so I can't complain. It was kind of a slower trade. It wasn't anything super, it wasn't like super scalpy. I was looking kind of like, I zoomed out and I saw this on the 15-minute chart, and I was like, I like this zone under like 80, 50. Is a spot that I want to buy it. And then that was really it. So that is the plan. I'll get rid of this stupid apartment building. I'm getting emails from them too, because like I signed into just like potentially book a tour too. Cause like maybe, when I didn't know the prices, and I was like, no, screw that. Absolutely not. Absolutely not. NVOS in the buy range. Let's take a look. I have been watching, it's on my watch list, and you know what? Like I had to check in on them, how they're doing, but I think this is going to be something to have on the radar here soon. Honestly, I would love it down under 150. That's what I would really like, but we might not get that. This thing has such a low float. It never really ran. Okay, obviously you look at the chart. Yeah, it ran. Like this is what the run was, and I made money on that. Great, but like not really. Like there was no pump. It was kind of like a couple days in a row, built, and went higher. There was no like true like news spike catalyst where the thing pops up 50% in one day, boom or more, and then it runs. So I think we still have that opportunity come at some point soon. So I'm going to look at this thing under this 150, really under 170 starts to get really interesting. Down to like 150 or in the 160s, 150 area. This is going to be a good spot, I think, under there. So that's what I'm looking at on that. I do like it. I just don't have, I'm not really interested in tossing any money into that right now. But I don't dislike, I mean, I do like it. I think it will run at some point. But you could probably get a better entry, especially if this thing does break down below like 170, which has been where it's dipped to the past couple of months. If it falls below here, you're probably going to get a better average somewhere else. So let's see if it flutters out and flushes a little more. But each of these flushes have been bought up, so maybe this gets bought up and it holds again, which would be pretty strong. By the way, the dollar DXY, look at this DXY breaking below this trend. DXY has been super strong. This coming down, geez, man, I think we're going to get a touch to 105 soon. That's like a next week potentially opportunity. So look at that, DXY. Everything you want to look for the market to rally is there, which is why we're up here. DXY, nothing crazy, but it broke down a little bit from the highs. So it hit up to like 109. Now it's at 106 or just under 106. Okay, broke the trend line, which is kind of key. The 10-year under 2.7. 10 years breaking down. You have where's oil? Oil's in sub $100 still. Oil, got above 100 today. Got flushed out, got rejected here. Again, what have we seen on oil? Can't deny it. Lower highs. Every couple of days, we make a push, and it's a lower high. So all those things are good for stocks. I mean, they have been the things that have been or sending us lower. They have now reversed, and I think there are a lot of reasons why we're going higher. Not the only reasons. There's many more factors at play, but those are some good reasons. If we look at Aaa gas prices, let's take a look at these. What's this at now? Was that like 427 yesterday? Yeah, it's at 425 now. So this is getting even lower and lower. I mean, I'm getting really excited for next CPI. Take a look at the next CPI, which we have, I think, on the 10th of August. August 10th, yeah. August 10th, 8:30 a.m. We'll do a stream for that for sure, which August 10th is I have physical therapy that morning. That is a Wednesday. We'll still do a stream for that because I have PT like an hour later. But yeah, that's going to be fun. This is going to be, I think, potentially a ripper day. But then again, I think the market will know that going in. The question is going to be how low does it come? Like how low is CPI going to go? This is where I think it gets interesting, because if we jump over to look at the latest charts and graphs here from CPI, let's just jump in and check it out. Look at this. So we know that all items less food and energy, let me zoom in. I know it's like tough to see. Why didn't it work? There it is. All items less food and energy, let me just adjust it over to the side so you guys can kind of see what I'm saying. Okay, yeah, so all items less food and energy has been coming down since March, really. March was the peak, and then it's come down. We have yet to come down across the all items, which we know is going to come down this next month because of oil and gas. The question is going to be how much. That's the lottery ticket question here. Which, by the way, lottery is like over $1 billion, which is nuts. The Powerball or Mega Millions, whatever it is. I've been seeing that. It's kind of crazy. This thing is at 9. The question is, okay, I've been seeing people saying, oh, it's going to come in at 8. What does it come in? Does it come in at 8? Does it come in at 7 something? If it comes in sub 8, that's a pretty big move down. I mean, we haven't been under 8 since February. So under an 8.0 would be a good look, I think. So I think that's kind of maybe your threshold, like, depending upon how low. If it comes in mid 7s, oh man, market's going to like that. I think also all items less food and energy. We'll see what the projections are in the next week or two. All items less food and energy, I'm curious how this continues, because this has been key. Obviously, you eliminate oil, how does this look, right? Does this continue to come down? If this red line has a substantial pull down next month, We know the blue line is going to come down hard because of energy. But if this red line has a substantial pull down next month, that's going to be the market's going to, I think it's going to like that a lot, because now you know oil is coming down, gas is coming down. But if you get everything else that's not food and energy coming down too at a sharper pace, that's also probably going to scare the Fed, because the Fed's going to go, wait a second. We know when you raise rates, right? It's a lagging effect. It doesn't affect things tomorrow. It doesn't affect everything. Nothing's going to go down tomorrow, right? But 6 months later, 8 months later, those effects are, you're feeling them, right? So the question is going to be, if this all items less food and energy really starts coming in, again and again, like there's not much that they can really do to slow the rate of the decrease there down. So, are we headed for a deflationary environment? I don't know. It's what people are saying. Kathy Wood specifically, I think, is one who said a couple weeks back, and I've seen some people talk about that. Whether you believe her or not, I don't know. If this stuff starts coming down really, really hard, and the Fed's like, oh, wait a second, we can't really, take back a rate hike we had, they might have to pause or really slow it down to a 25, and market's probably going to like that, I'm guessing. Probably. All right, let's see what we got on SPY into the close. You got 15 minutes to go here. So had a little pullback, and it looks like we're going to probably squeeze out into the close. I mean, look at how just slow and steady wins the race this afternoon. You're going to get a break of this trend at some point. Either you're going to have a break to the downside and you're going to have a pretty big move down, or you're going to have, I think, a squeeze out to the upside to finish the day off, and we're going to extend up maybe to like 413 to 415, something up in there, which seems like a lot, but it could happen fast into the close. So let's see what we get. But the cover call portfolio is not something that's like a fun growth, super fast portfolio, but is a slow and steady way to just build an account, build your wealth, build your investment portfolio. And you can pick the stocks that you want to hold long-term anyway. I don't recommend doing it for like random stocks. I mean, I have a little bit of stuff in there that like, do I really care about Snapchat long-term? Do I care about Carnival Cruise necessarily long-term? No, but if they appreciated a decent amount in the next 6, 12, 18 months, I'll take them off. Like, I don't care, and lock it in and go find something else that I think is a better value, that I want to hold longer term anyway. Or do I think Fisker is a great buy long term? I have no idea what Fisker. I just think Fisker is going to be a good run up into their production, and it's like kind of a risk on play, and I think we're headed towards that environment. So that's the idea. It's funny. We were just talking about the apartment complex a few minutes ago. I literally just got an email from them right now asking to come tour. No, I'm good, but I definitely am thinking about making a move. We're thinking about making a move soon. Currently living in downtown. It was cheap when we moved here during COVID because no one was moving into the city, but we're thinking about moving out of downtown because I'm not a big. I mean, it's just turning into stuff that like all the things that I hated about a city are all just happening, and I'm just not a huge fan of. I was never a big fan of, at least live up in Connecticut, so I was like an hour and a half outside of New York. Was never a big fan of New York, the city, had family that lived there and stuff and whatever, would go in a lot, but I was never a big fan. I was like, I can't live in the city like this. Not to mention New York's extremely expensive, but yeah, I'm thinking outside of downtown here might be the move in a little bit. How about buying puts on instead of, you could do that. You could do that too. I'm looking at it from more of just like a short-term perspective, but you could take advantage of puts on TQQ instead of calls. But let's just check in on the options though, and just to see. Oh, by the way, XBI is ripping face into the close. I guess I could have waited on buying both of those puts, right? Could have bought them a little bit later on. Jeez. What else do I have? The SQQQs. I'm going to add one more of these. We'll hopefully get a better price on that. But TQQQ. Jump back to this guy. Take a look at the chart on this guy. I would be looking at, what did I buy? I bought the 26th of August. So I would look at TQQQs here at like 34, maybe the 35 puts. The 35 puts have more volume. So play the 35 puts. Yeah. It's a valid play as well. You can play them both ways, but I would say that's not a bad idea. It's not, they're not the same exact, but like in a sense for what I'm looking for is I'm looking to play the pullback. I'm not looking to hold these things for like 3, 4, 5 months to worry about the 3x nature of these ETFs. But let's see, TLT, anything else? So the XBI puts, they're just the hedge. So we'll see how that shakes out. But I bought 80 puts, so they're like at the money. So the 80 puts, I bought at like $3 on XBI. So essentially on XBI, we would need a flush to buy the expiration, which is August 19th. So it's like 3 weeks out. I would need a flush to 77 to break even. Bottom of this level, yeah. I'm looking for like 75, ideally, is what I kind of want to see. That would still be a higher low than the low that we saw back at the end of June, early July. I kind of want 75. We might not get it. Maybe 77 is actually a better target. But if that happens in like a week or two, there'll still be some more value there. Those will be, at least we'll be able to get out green on those. So we'll see. But I like those hedge plays. How's the support doing? So it looks like a decent week, I guess, right? 5% in the port. It's not bad. That's how it closes out. I had one stupid SPY like hedge or put play that I played one day after I thought we ripped pretty hard. I was like, I think we can play backside here, and it ripped even further. So I lost a couple $100 on that. So it could have been like over 1,000, but whatever. I've been taking out some chunk. I've been taking out a couple hundred. So I think of this 800, I probably took out like 400 this week. So it's been nice. So because the portfolio has kind of like held its value, despite me taking out probably in the past couple of weeks, $2,000 at least. No, at least $1,000, more than 1,000, maybe almost $2,500. So Exxon will hit a new all-time high next month. Let's see. Oh wait, where is it? So actually, I had a good earnings day, right? Yeah, this is dependent upon oil. So I guess you're looking at if you think oil is going to break back up over 105, yes, I think a good spot here on ExxonMobil, right up in here, this gap fill. So once it gets back to $100, if that could be a decent reshort zone for a target down here to fill this gap at least. The thought there would be oil going down. It's up to, I don't know how you see it. If you think oil is going to go up or down, at this point in time, like I have no really big feel on that or big, conviction either way. We're kind of in a weird limbo spot, I think, for oil. I can see it bouncing from here. I could see it falling off, whether people realize or think or don't think that's going to happen. The highs right here, we're close, but I think that the risk, the bigger danger could be a potential attempt to make a high, but like a fail. So not being able to break a new high, and then that lower high could be the, I'm not sure how long or how big of a move it will be, but that could be the better risk reward for the short versus these highs. But that, I don't really have a huge interest either way to play that. It could. If oil goes up, it will. It probably will. It's got some good strength after earnings. If oil has a really strong week the next couple of weeks, yeah. Next month at least, yeah. $600 of gold, just to test waters. Gold, what's gold looking like here? Let's see. Yeah. Oh man, look what happened here on gold. It came down into this zone that we had charted out beautifully, held the bottom of that and bounced. Silver. Oh well, what is this? Oh yeah. Silver right into that zone too that we had and bounced. Look at that. Bitcoin's at 24K roughly, just under 24K. Just checking. Bitcoin's at the 50-period moving average. First time it's been there. Geez, yeah, first time being there in a long since April. Yeah, that's crazy. On Bitcoin. Let's see. Let's jump over to SPY. We got 8 minutes left. Let's see what happens into the close. If I had to bet, I'm gonna bet that we squeeze out here into the close. So like those lotto, for like 13 calls that are currently trading for like, I don't know, like probably 2 cents. Could be nuts. Let's see what those 413 calls are looking at on SPY. Let's see. SPY, jump over here, go to the option chain for today's expiration. Crazy, we were like down at like 360 like a couple weeks ago. The 413 calls right now, look at these. Let's watch these things. They are trading for Look at how volatile these are going to be in the last like few minutes here. These things are trading 9 cents. So it's possible if we ripped over 413, looks like we're selling off into the close here. These are either going to go worthless or they're going to go like rip face. Let's see. So they're at 9 cents right now. That's because we got a little pullback right there on SPY. But if SPY was to bounce and slip back over 413, well, actually it got rejected at 413. You know, you have 7 minutes left. So it looks like we're gonna get a sell-off. We're not gonna get a squeeze out. I'm surprised. I kind of thought we'd see a squeeze out, but whatever. I think we're gonna open on Monday. I don't know. We could open up with some strength, people feeling good after this week. But I think next week, if I had to bet, I would say that we finish the week under 415. I would think a move down to 400 would be a really nice retest of 400, and a bounce there could be cool. But I think we finish it under 415. Obviously, we're under 415 right now by like $3 or $2. But I think that we could push up early, and then I think that could be a good short play. I just think that because this week was such a good week, that momentum could 100% carry over, and be cool. But I think that the better risk reward after how fast we pushed up and squeezed a lot of shorts right out, the better risk reward could be for a pullback next week. HKD, man. 421. Hit 485 a few minutes ago on HKD. That's absolutely insane. Today alone, 132%. That is wild. This thing was insane. We were just talking, right? Like a half hour ago, that this is great because this is going to be this is a 4,000% runner in this week, or like the past like 2 weeks, right? Whatever, however long since from $12, right? So this is what ignites the fire in the flame for small caps. I mean, 100%, like 100%. I mean, this is great. I love seeing that, and you need a big monster runner like that to get people excited, to get the algos juiced up again. So it's good to see. It's good to see. I mean, grab another one of these SQQQs. Now the spread's kind of opened up here. Let's see if I can get another one of these guys at 330. Might not get it. I want to get one contract at 3. I have a 340 average. Let's see if I can get 330. 335. Let's see if I get 330 before the close. I can adjust that. I got 5 minutes to get it, just to hedge us for next week. That's the plan. Let's see what SPY's doing here. Yeah, so we got to pull back into the close. I would expect a squeeze out, but whatever. Bought HK at the debut when it was made $2 a share. You could have made like, I don't know, a couple $100 a share on that. Jeez. Yeah, but you never know how much these things are going to go, right? No one has any idea. All right, let's get this fill on this SQQQ. Looks like we're going to sell off a little bit to the close. 335. Come on. Fill me. There it is. So I have two of those, two XBI puts. That's my hedges. You can play TQQQ puts. You can play QQQ puts. You can play SPY puts, whatever you want to do. But yes, I like it. My dad just texted me. SPY puts for next week. He knows. Yes, I got some SQQQ. That's hilarious. We were literally just talking about it too. And it's like last 5 minutes of the day, he's thinking the same thing. Maybe that's not good because we're all thinking the same way. So we're going to get the opposite next week and we keep rallying. And it's just reverse psychology. Maybe that's we're all going to get fooled again. Long Island here. Yeah, no. I mean, we used to go to Montauk all the time. We'd go on like in the summer, we go to Montauk at the end of Long Island. For those who don't know, it's out it's literally the end of it's like just past the Hamptons on Long Island. But yeah, I would go there like almost every summer. My sister's actually there right now. She's with a friend. But yeah, it's hilarious. I think she's there. Maybe she's coming back. I don't know what she's doing, honestly. I have no idea. My siblings are all over the place. They all go to different colleges. They're all, home at different times. My parents live in Georgia, so they're like all around. Like, they're usually, well, if they're all home, they're all there. This summer they've been all there, but now they're about to go like all different ways, 3 different ways to finish off or to go back to school. So, okay, what do we got on this? How's the heat map doing today? Green AF. Oil and energy plays they must have had some strong earnings this morning. Those are strong today, even though oil is just not ripping like crazy, but it's nice. If you look at healthcare today, it's got some weakness, so that's why biotechs were relatively weak. I'm just thinking if we obviously they don't have to go with SPY, but if we did get some further weakness in SPY next week, I think the biotech space, given that it wasn't super strong with this market right now, like if you look around at the market and you look at SPY, it's at 411 or 412, right? Here's the daily chart. This is why I like the XBI puts, as a hedge. Look at SPY, look at how strong it is. It's finishing up towards the high of the day, high of the week. XBI is just in this consolidation. Yeah, it's got higher lows, but I think we could break this trend and fall back off to like the mid to upper 70s next week. And that's all I'm looking for. Really looking for it to fill back through on this volume gap right here, down to like 70, honestly 76 could be a good spot. I think 50 SMA will be a really good spot, which is right now at 75. That will come up next week a little bit. So 76 could be even a good spot, on that. So if we get a flush out quickly on XBI next week, taking the profits, I don't care. And then as I start to feel good, if oil's still down, if the 10-year is still down, hey, I'm going to just start funneling that money back into some longer calls for Labu. That's it. That's the plan. BCAC in at 1082, sold at 14. Jeez, now that's 27. That's the good news though, is that especially for those people who are following a momentum based, right, small cap land, you can see it's picking up. Like it's picking up. I think it's going to really pick up. We haven't really seen, I would say, the swings. Depends upon what you're looking at. The swing market hasn't been as hot, but I think that will pick up too. So at least my style of small cap trading, I'm thinking it's going to start picking up in the coming weeks and months. So we're going to see, but it should be a lot of fun. All right, so SPY finishes the day at 412. 412. So by the way, too, look at this. We were jumping around. We were looking at those four on SPY, the 413 calls. If you look at the 412 puts, look at some of those at the close for today. The 412 puts. Look at these guys. These things went just briefly because we got that pullback. They went from 10 cents and they hit up to 40 cents. So like imagine like with any size. Imagine playing this with any size. You got to have some freaking... You better be calm, cool, and collected because that's a wild ride. From 10 cent low, hitting up to 40 cents. So you 4x'd your money. You could have 4x'd that trade in a matter of like 6 minutes, 5 minutes. And which is hilarious. All right. Oh, TLT ended up, so it looks like bonds or TLT ended up falling off. Oh, look at that. Yeah, it did dump off a little bit to the close. I don't know. I still like this thing, man. I feel like this is gonna be good. It's got some resistance up here towards this 120. But I think when we break that, it's gonna go. So I got October calls there. But yeah, looking honestly like it was a good week. I have to say, can't complain about how this played out. I think it's set up for a pullback next week or maybe the week after that. Who knows if you're gonna dial into the exact day? Who freaking knows? And who really cares? I think we're setting up for a pullback, and I think it would be really good because what you're going to get is if we get a pullback, then what happens is this. All the guys who are like, this is a bear market rally. No, I don't believe it. I don't believe it. I don't believe it. I don't believe it. Are going to come back out. Oh, told you so. Told you so. Told you so. But then the question is, what happens if we don't go to new lows? Then what are they going to say? So then you're going to be back in that same kind of back and forth. So that's going to be ultimately the question. Those trades are nauseating. No, it's nuts. It is nuts. But we had a great week. There's a lot of streams. Next week, we'll be back to the usual Monday, Wednesday, Friday. Maybe we go back. We just start doing streams every day. Honestly, I enjoy it, so we might do that some weeks. That's the plan. But we'll see what happens. Again, tomorrow's video, we'll do an update on the portfolio, everything, all that stuff. I'm sure a lot of you guys who are on the streams already know. But we'll update everything there. Robinhood, small account, Webull. That's it. There's Webull, there's a small account, and there's Robinhood. That's it. I have an IRA with TD Ameritrade, but that's really it. And then I have a bunch of like other accounts that have like random $5 here, free stock there, like with Public and like I don't know, whatever. But that's it. The primary one. Those are primaries, primary accounts. That's the plan. Updates coming tomorrow, and we'll do a stream on Sunday night like usual. So stay tuned for that. We'll get futures. Once we get the futures and all that good stuff, that's the plan for Sunday. And then next week, Monday, Wednesday, Friday, we'll do I think on Thursday, I'm aiming for is a full breakdown of at least my results from the small account challenge. And I would encourage, I've had people who've asked me questions, how do I join? It's not a contest. Like I guess we could, but like the point isn't necessarily for that. It's like, I was just going to, document it myself and show it, live, week by week, day by day as I do it, as I take out the trades. But the point is going to be, hopefully it's a good, guide, so that if you're looking to do something similar to take away, maybe there's something that I mentioned or a data point that I'm tracking that you haven't been thinking about. Maybe you can take that and apply it to your own trading, right? Or investing, that could help you. So that's the idea. We're going to see what we can pull out of the past, I guess it's been 3 weeks now. I've been doing the small account challenge. Well, what can we pull out of the past 3 weeks? Positives, negatives, things to correct, things to get better at, things to eliminate, things to do more of, right? What can we pull out of this past 3 weeks? And then, let's see how we do the next 3 weeks or the next month, ideally. That's the plan. So stay tuned for that. Make sure you subscribe. If you are new, thumbs up button. I appreciate you guys like always for tuning on in. Links, resources down below, trading views, link down below. So this is this platform. I like to use this for the charts. And then I like to do Webull for my mobile and also just for my for my actual broker entering in trades. You can connect certain broker platforms to TradingView. Not many. Interactive Brokers is one. There's a link to Interactive Brokers down below if you want a new broker. Check it out. I have them synced up, but we're waiting for small caps to heat up. Then what we're going to do, take $2,000 out of the Webull and probably put it into there. And we're only going to be shorting backside plays of small caps once we have a hotter market for them. It's getting there, but I want to start seeing us really get going. And then the play there is really going to be, because in any given day, you could have like 5 to 10 stocks, all like runners. It's finding the weak links and playing the backside. Once they start establishing backside, is playing the backside to short there. That's what I want to do with that account. That's the plan. Maybe that we change the idea. That's the plan of that going forward, just because there is going to be opportunity on backside of some of these, crazy, moving small cap plays in the future. Thanks so much for watching, guys. I will see you next week. Peace out. Enjoy the weekend. See you guys.